Everything is terrible. More specifically, things aren't looking good for the US dollar. CPI numbers were released this morning and they all came out worse than expected. Month over month, CPI came out at 0.4%, year over year CPI at 7.7%, and core CPI month over month at 0.3%. Not only that, but unemployment numbers came out higher than expected at 225,000 unemployment claims. Inflation dropping is good for U.S. citizens, but overall bad for the dollar, as lower CPI typically leads to higher stock prices like the S&P 500. Unemployment rising is obviously bad for the economy, so could this be the end of the crazy bullish run that the dollar has been on? I guess we'll just have to wait and see. A quick reminder that tomorrow GDP numbers for the UK will be released, so stay tuned for that. Now let's go ahead and take a look at a pair in the EdgeFinder. All right, so here we are inside of the EdgeFinder, and we're taking a look at the score chart summary. But before we get to our currency pair, I want to show you something really cool. If we go over here to the inflation tab, we can actually take a look at US dollar inflation. And we can see that today, November 10th, we have our current inflation rate at 7.7%. That information was released just a little over an hour ago, hour and a half ago. And it's already updated inside of the EdgeFinder. And that is why you guys need the EdgeFinder, because it pulls in so much data: GDP growth, inflation, unemployment, interest rates, our price forecast, our Fed tracker, our smart money tracker, retail sentiment. We have everything that you could possibly need as a trader all in one spot for you. And of course, we're having our Black Friday sale where we're doing our biggest discount of the entire year, 40% off the EdgeFinder with code A1YT. Again, that is 40% off the EdgeFinder. You get all of this information in one place to help you with every single trade that you take. 40% off the EdgeFinder with code A1YT. This sale is not going to last forever, so you need to hop on this while you can, because the EdgeFinder, in the long run, the EdgeFinder is an investment. You're going to spend the money now and you're going to make it back in your trading, because this helps you with your trading. It is such a useful tool. Traders tell us all the time how much they love the EdgeFinder. So again, EdgeFinder, 40% off, code A1YT. Go ahead and get it now while the sale is happening. All right, now let's take a look at the score chart summary. We are talking about US CPI. We also have GDP numbers for the pound coming in tomorrow. So we're definitely going to look at a pound pair tomorrow. Major currency pairs, if we wanted to take a look at the US dollar, which we did yesterday, we did take a look at a US dollar pair yesterday, and there's nothing that's really jumping out at me because we have so many neutral scores right now with the dollar. We had a lot for a long time. The dollar was incredibly bullish, so that was leading to some strong sells and some strong buys in other areas. But with this recent news, everything is kind of falling back into place, going towards the middle. The strong buys aren't really there anymore. The heavy sells aren't really there anymore, and things are kind of leveling out with this recent dollar news. Of course, I just showed you that our inflation is updated, so we already got that up-to-date information. So I'm thinking instead we could just look at one of these strong sells down here. AUD NZD is jumping out to me because I think that we're going to look at a pound pair tomorrow when we're looking at our new GDP growth. So because AUD NZD is by far our biggest favorite, if you will, in the EdgeFinder, I think we're going to go ahead and take a look at that. So if I want to come to minor currency pairs, AUD NZD right here, click on that, brings us into the AUD NZD breakdown page.
Hey, I have a secret. We're doing 40% off our VIP community now. Trade alerts, chat rooms, and more. Click the link in our description with code A1YT.
And we can see that we have a score of -9 and a whole lot of red. Whole lot of red right here. If you know, you know. Strong sell bias, score of -9. COT data comes out to a score of -1. We can take a look at our our sentiment section right here. New Zealand dollar 45.83% long and 54.17% short. Australian dollar 28.47 or 74% long, and 71.26% short. So both favored on the short side when it comes to smart money traders, although the Australian dollar is pretty heavily favored on the short side, whereas the New Zealand dollar is a little closer to 50-50, but it's still kind of leaning towards the short side. Retail traders are 63% long and 37% short on the pair as a whole. So leaning towards the long side there. That's still giving us a score of -1. Seasonality is a score of -1 as well. And look at how this pair has dropped. The reason I love seasonality is when the current year average lines up with the all-time average and the last 5-year average. When all three of those line up together, I find it really, really interesting. And also, it just shows how seasonality can be such a useful tool. So, of course, we have our all-time average and last 5-year average here. And we can actually see that ever since September, all-time average continues to drop. The last 5-year average since August drops until November, and we see a slight upward moving into December. But current year average follows that trend. September to November, we've seen this pair shoot nothing, just shoot to the downside. So I find that so interesting that all-time and last 5-year and current year average from September to November, that 3-month span is just the same. Just historically speaking, this pair falls during those months. And it's just obvious and clear to see right there. Trend reading is a score of -2, and that means that this market is definitely trending downwards. We can actually look here at October 27th, or you could even say the 26th maybe. And I mean, a pretty strong downward move into November, a little bit of consolidation, a little bit downward trend, a little bit up, and our price forecast is showing that this is definitely predicting that this is going to continue on to the downside, as does our seasonality, of course. Moving into December, all time speaking, this pair typically tends to trend downward. That's a tongue twister right there. And so we're expecting to see that. The EdgeFinder is expecting to see that. GDP growth, inflation, unemployment, and interest rates all have scores of -1. And we can take a look at that right over here. Australian dollar GDP growth 0.9%, New Zealand dollar 1.7%. Inflation for Australia 7.3% compared to 7.2 in New Zealand. Unemployment rate for Australia 3.5% compared to 3.3 in New Zealand. And lastly, interest rates 2.85% for Australia, 3.5% for New Zealand. Now, if you're curious at all why these things are scored the way that we do, we have our scanner output summary, which is a written summary of the scores that you see here. It explains why we score the things the way that we do. Simply speaking, if we're talking about sentiment section here, once it crosses that 60% threshold, if it's leaning 60% one way or the other, that's kind of our cue that either retail traders or COT, institutional traders, are favoring one thing or the other. Once it crosses that 60% threshold, it also explains, why these things are scored the way that we do, explains why seasonality is important. I can briefly say that, for example, GDP growth, we're comparing Australian dollar to New Zealand dollar. So we're buying or selling the Australian dollar compared to the New Zealand dollar, right? So do we want to buy the New Zealand dollar, do we want to buy the Australian dollar based off what the New Zealand dollar is worth, or do we want to sell the Australian dollar based off what the New Zealand dollar is worth? Well, if we take a look at this section here, Australia's GDP is not as good as New Zealand's. So that would be a sell, because not as good as New Zealand's. Not going to go up from there. Unemployment is higher than in New Zealand's. That's not good for Australia either. That's not going to help the currency. That's a sell. Inflation is higher than it is in New Zealand. It's close, but it's higher. So that, again, not good for the currency. Not going to help it go up. That's a sell. Interest rates are a little tricky, but the higher interest rates actually show bullish momentum for the currency. So because Australia has a lower interest rate than New Zealand does, that is a sell when it comes to this pair. So that's a quick explanation of what we're looking at there for any new traders who might be watching. Now we're going to watch the news event from today's live stream with TraderNick and Miko.
let's see. I want to also say, in terms of the Fed tracker, this is a big one because going into a release like this, inflation is what we focus on very heavily, just like the Fed does, right? And the Fed is looking for inflation to curb. In fact, we have a 4% target here, according to our forecast, by Q3 of 2023. That's a ways away, and we need to start seeing that number come down. The Fed knows it. You and I know it. If we're trading, that's what they're paying attention to. So if you're a dollar bull, we need that number to not come down too hard. But if you're a dollar bear, you need that number to come down hard. You need to see 7.9% or below for today's CPI number. We're going to see how that plays out. Of course, in terms of overall bias for the dollar, we can take a quick look at the Fed tracker and we can see, okay, Fed tracker in terms of the US dollar right now, we are leaning bullish on several factors. GDP growth looking strong in the US, giving us that bullish bias. We take a look at inflation. Inflation, right now, we're about to get an update on this, right? So we have the previous reporting was a bearish thing for the dollar. We saw inflation slightly curb. Question is, will today we see the continuation? And for the dollar traders out there, this is your stat to pay attention to today. Are we going to see continuation of this thing printing a bearish reading for dollar, which could continue to tug it down further, or is that going to flip back into bullish territory? That's where we're at today. That's the in question moment. We take a look at unemployment. Unemployment is bearish right now in the US. Interest rates bullish, right? We've been raising interest rates. That's continuing to put upward pressure on the dollar as we outpace many of the other countries and central banks. Money supply bullish right now as well. So here's the thing, right? Going into a release like this is where we pay attention. The Fed tracker allows you to take a look at that. Just before we see the spike, and we have a moment here, I want to just remind you guys, if you would like to get access to the EdgeFinder for free, give me just one moment. I'm going to drop a link so that you guys can get access to this tool to try it out for yourself. If you are a fundamental trader like myself, I'm a technical and fundamental trader, I would encourage you to grab this link. I'm dropping it in the chat right now. Click this link. That link right here. Click this link, fill out that form, and one of my team members will get you access to the EdgeFinder to try it out. So check it out there. Again, just fill that one out, and we'll have people on standby sending messages out to get you guys access if you want to try it out. So guys, we've got just a little bit here, and remember, don't go anywhere after the spike. We're going to watch the actual release, and then we're going to add some commentary and see if we can find some trade setups. So here's your view. We're going into the release. Again, we have what is this? We have 30 seconds here before the news. I just want to walk you through what we're looking at here. So I'm going to pull up my dollar yen trade so you guys can see if I get stopped out of my trade here or not. Here's a 4-hour view of the dollar yen. So what you've got here is you've got 20 seconds, and this is the USD JPY. You've got pound USD on the left here, guys. You've got gold on the bottom left, and you've got the euro on the bottom right. We'll take a look here, and then we'll rotate some assets as well. Actually, you know what? I'm going to pull pound USD off, and I'm just going to put the S&P 500 because I'd like to see what the stock market sees going into this event. Okay, so there we go. Number is out, and we have the S&P 500 flying. Look at that. I'm going to get stopped out real quick on that one. USD JPY not going my way. A little bit of a tough one there, but my S&P 500 trade probably going very well. Wow, what a spike to the upside. Stock starting out very, very strong here. And the gold market also rallying up to 1727. My goodness, euro dollar also on the upside. S&P 500 up to 3830. Be careful, you guys, on initial reactions like this. It can spike back the other direction. Please drop in the chat if you guys don't mind. If you have the numbers, please feel free to drop them in the chat so everybody can see them. But it does seem like we had perhaps a miss on CPI numbers here as the dollar comes down hard going into this. Let's look at DXY. Yep, the dollar coming down pretty aggressively with the gold market rallying all the way from 1711 up to 1733 in a matter of split seconds there. 7.7. Is that right? Look at this, you guys. Let's refresh the page and see if we can let's see, is that correct? 7.7, really? Really, 7.7%. That is a huge miss. 7.7% coming out with CPI, and a massive catalyst to the upside for stocks, and rightfully so, as you see the gold market, stock market, and euro rallying with the dollar dropping real hard. And this is interesting stuff to pay attention to today, guys. This is wow.
I mean, gold's taking out that structure, so gold doesn't look good to short anymore. But yeah, I need to wait for things to develop a little bit further. We've just seen a big bullish candle, You know, some people excited buying onto that. A few people being stopped out. So, you know, it's a little bit sensitive right now. But yeah, what pairs are you guys looking to see? Gold, GU, Euro USD. I got to start out on my lesson. At least you learned your lesson. NZUSD, US 30. Pavana, hey, how are you doing? Okay, a lot of indices, Euro USD. Vince, my man, see you on the stream. Hope everyone is doing good. So yeah, I mean, the dollar pairs are the talk of the town, obviously. I mean, gold, big push to the upside. I was still looking to short gold today, actually. Well, not today, but still looking to short gold. I was waiting for some price action to develop because all we had today was basically just consolidation. So it was very, very messy, not really giving me any sign that the market wants to reverse. All I was looking for is the market not to take out this high here, which the market has just done now. So that's put a bit of a spanner in the works for me for gold. And gold could actually be looking at a crazy move to the upside because I've been very bearish for gold for quite a while. And the main reason is because we've been trading below 1700. So I'll be looking for gold to go and hit 1600, the next psychological level, you know, 1600 here. But the market, if it closes like this, it's the weekly time frame, by the way. If we close like this on the weekly, yeah, we could be looking at a big fake out on gold underneath this support, and we could be looking at gold finding its feet, maybe even for a big move back to this area here. So gold could actually see a lot more upside. If it gets kind of like that, it completely invalidates my sell bias for this one. So yeah, gold's looking at potentially a reversal now. So any correction to the downside, retest of this structure, I actually favor some bias for gold now, even though I've been very, very sell bias for gold for quite some time. But if gold's to have a bit of a correctional move to the downside, I would favor those buys to the upside in the next kind of wave for this one.
Make sure you guys check out the links in the description if you need broker recommendations, access to our free Discord, or want to chat with us on Telegram. If you're interested in our trading software, the EdgeFinder, you can find that in the description as well. Thanks for watching.